Traders, let's take a look at setups and signals. I want to focus a little bit here to start on this euro. Such a fantastic example of the base SOS strategy, strength of signal, building strength of signal, using structure. So we looked left yesterday and we identified this massive spike high right there in the euro. That bad boy popped up to 110.10. We knew that we had a DSR level there, and as the market rallied back into that key resistance level, we knew we'd have an opportunity for a counter trend trade. Okay? So, first couple of questions that I always ask, where is price relative to? Number one, structure. We were right at that previous strike high, or spike high. Number two, where's the market at relative to my DSR levels? Here, I've got a DSR resistance level, and we're inside of that big DSR resistance zone. And then number three, where's price relative to the Big Mo? So here, we're at structure. We're above the Big Mo, so I know that if I get a qualified signal here, it will be a sell signal and it will be counter trend. Some traders don't like counter trend trades. If you're not a counter trend trader, don't take the trade. If you are, which I am, I placed the limit order in here. I used a catastrophic stop. And then as we know, I pulled back here, took some profits. Retested right there, and there is the classic SOS sell signal. So there's the symmetrical double top, counter trend, sold it again here, covered again here. So over 100 pips right there, trading two contracts on each trade. And again, the perfect visual right there of a counter trend symmetrical double top. Price symmetry, time symmetry. Number of bars down equal to number of bars back up. Easy to identify and spot that double top high. Okay, so there's our counter trend. Now the market then rolls over and pulls back down into this area, and a couple of things take place here. Number one, we have a blue Big Mo bullish. We're pulling back down. Now here's a double bottom with trend. We're buyers in a bull market, in an up moving market. So we looked at our key price point. We knew that we wanted to be long on an adverse excursion at the 109.20s. We also looked left right here and identified spike lows right there below that 109 big round number right here. We knew that stops had to go below that. We then identified our risk-reward ratio. So we bought them. As the market moved down against the position, I added. We put in another beautiful symmetrical double bottom here. Bottom line is, from the point of entry over here at 830, 849, you can see that the market went completely sideways. And we talked about certain tendencies in these markets. During that sideways trade phase, you see that our RSI spends less time above 80 and below 20. It starts to consolidate. There is no solid directional movement. Remain patient. The add-on that I bought down here, I covered those here, so I was still long net 2. And then finally right here, we got on the bid around 3 p.m. Central Time, and the market starts to rally. My oscillator signal generates a buy on the blue in the background. The market pops here, and you can see right here this morning early I took half off on a retest of that previous high, and then the market rallied, and right here I had a 110.29 target 2. We traded to 27. My RSI was bearish divergent, so I had a lower high right there. And I said, you know what, I'm going to take it. Rather than 29, I took 5 pips less. But my stop was down here at 89. Had I not taken it, I would have been stopped out here and made 30 pips less than taking that profit. So now we're kind of back into a slight bull phase, all flat on that position. And again, we had a beautiful risk-reward ratio. We were risking 40 pips down here in this area to make plus 40 or more here, and then 100 pips if we did go back and retest that area. Now, what do we have set up? Again, did this high take out our previous swing high? It did not. So I'm looking to trade the counter trend here. A, where's price relative to a level? Look left. There's structure resistance at the 110.40. Number 2, where's price relative to a dynamic resistance zone? We'll be right at the DSR resistance. And then number 3, where's price relative to the Big Mo? Big Mo's bullish, blue, starting to give me some bullish slope. So we're above that line. Thus, this would be a counter trend trade. So here's a double bottom with trend. Here's a double top counter trend, not quite back to structure and the DSR level. That's why I didn't take any sell signals right there. But perfect example of just the power of structure. Price is truth. Traders are trading at or near those levels for a reason. Let's trade where the big boys trade. You've seen all the ads, all the videos about smart money and so on. Great example right there. People are buying this thing up at 109 to 109.20 for a reason. Let's trade with them. I'll get into some more on the SOS signal. We've got videos 1 and 2 done. I'll be adding 2 more videos this week. I'll put that up for you in the VPT section. All right, now let's come back in here. I think I just got short crude oil. Crude oil popped as well. We're in the May contract. Okay, so I took an aggressive sell right here, gang. Sold them right here. Relatively tight stop. I was trading the overbought higher low bearish divergence double top at the 47.90 48s. So you can see right there taken out as we make new structure highs, higher close. So not a question of if structure will break, just when and in which direction. So there was a counter trend sell. We just made a new structure high. Now we'll look for a pullback in 47.63s and look for a possible trade with trend. Obviously, extended targets on any buy signals are going to be 840 to 850. And then if we do rally straight to this level with no pullback or no long entries, we'll look at qualified sell signals against 48.5. Crude oil, let's go look at our Dow. Dow Jones had a great swing trade yesterday. That was a trade with trend. Got long right here, took profits here, took profits here. So again, same signal we just saw. Market's in a bull continuation pattern. Beautiful qualified sell signals right here against structure resistance. Now we have a DSR level as well. Market had pulled back. There's oversold, lower high. Here's the DSR level. Here's bullish divergence on the relative strength index. Look left, we're at swing low, so we have market structure. And we had the DSR level. We were buying in a bull market. Target 1 attained right there for plus 37. And then out on a trail stop right there for plus 50. So a quick little 87-point winner. We pulled back down, and now that structure support has broken. Dow Jones has made new structure lows. And now as we rally back into that key level, we'd anticipate structure resistance. So let's go grab this. Grab your horizontal line. Drop it in right there. Support, support, support. We broke it to a new structure low there, 17,934s. Rallied right back to it, 981. And from that 981, our lowest low, has been an 80-point move. Now you can see we've got a point of confluence. The Big Mo's turning down and plotting right there at 994. We've got a level at 80, just 14 points away in the Dow. So if we pop back into this level, 980 to 990, basically 980 to 18,000 Dow, a big number, I'll look for qualified sells. Then a retest of these lows, so I know I've got 80 to 90 points of opportunity. And then the next level is an active DSR support zone at 17,860, 870 in the Dow. Take a look at the NASDAQ. NASDAQ, we had qualified sell signals yesterday as we were closing down our live prop room. Market rolled over nicely. There was that big honkin' level right there. We got all those shorts on. I took about 15, 18 points as the market rolled over right here. We came down to our next DSR level right here during lunch. Had a quick pop trade off that, then stopped out as we rolled through it. So there's our new structure low. Popped back up, and you can see that now we're sideways. So I'm going to pull this guy up to here. NASDAQ 4438. Bigger picture. Let's take our fib extension. I'm going to go from this swing high, sore thumb high, that preceded the decline to this new structure low. We then rallied back to that lower high, the 382 fib, before making this new low. So let's measure that leg and identify. I've got a 127 extension at 44.18. My 1414 extension is going to come in right around this black horizontal line right here inside of the DSR level. There we go. Okay, so today we'll be watching this 13 to, so I'm going to pull this up to 44.15. We got a key price point coming in there, and we'll look at a go trade this morning as well. Okay, so right back into a nice little sell zone here. Again, 44.40. Our Big Mo plotting 44.41. Look left, structure, structure, structure. Any qualified sells right here, and retest these lows. We've got 15 points of opportunity, so we can easily risk 6 to 7 points and have a 1 to 2 risk-reward ratio. Finally, S&P 500. All right, S&P, beautiful bear continuation move. We took out our 2092 handles right here, rolled to new structure lows, and we've been in a lower low, lower high all the way down. So right here was our last line of support, and then once broken, that became resistance. I'm dragging this guy down. We'll look at the spike lows at the 2082 handle. And now let's expand the chart, look left. So if we pop back into the 91s, then we'll look at qualified sells. We do have a little bit of structure resistance at the 87s. I'm already short that right here on the day trade. So I'm just basically, I sold that 2087.50 right there, looking for us to roll back down and retest the lows of the day. About 3,000 yesterday in profit, so I increased my position size again based on my position sizing formula. Back up, and so we'll see what happens today. Okay, so key price points across the board. And then again, I'll do continuation on the training. Now, we also closed the room down yesterday. We had the buy signal there on the British pound. The British pound popped off of our long entries. I placed the limit orders in right here. I covered one for 10 or 12 pips last night, 841. And then my stops trailed. We made these new highs right here during the London session. That pulled my stops up, and I got taken out right there at 61. So about 30 pips right there on the British pound, and you can see that we did go ahead, rally. We made new structure highs, and we're still stuck like Chuck inside of this sideways channel. 48.40s to 49.80, a nice little 140 pip range. So any pullback to this level, we'll look at the long entries. 149.80, we want to be looking at qualified sell signals. All right, so we'll pull the British back over and let this guy roll over here. Now, remember, we looked at crude oil before on that double bottom with trend, so this would be a good example. If this guy pulls back down and we retest this 48.96, that would give us this double bottom right here. I'll pull the RSI in so we can see that, but definitely is oversold. Look left, we have a spike low at 48.83s. So a pullback down here would produce a buy signal for us with trend, with an expectation that we'd move back into the 49.40s. All right, let's take a look at any equities. We got anything on the stock side you want to look at, brother? I think so. Let's take a look. We want a Brickwick, or do you want? Yeah, let's go higher time frame here. So let's go ZN 0614. Fantastic. There we are. We'll look at the 1,000 tick, and then I'll pull up a higher time frame over here while we're looking at this. Come on, baby, populate. Okay. Yeah, I'll try to load it on another one. I'm having challenges getting historical data as well. Well, here we go. Let's take a look at this guy. This has got other directional indicators on it. Let's go here. Let's come here, and now let's go to the daily. And gang, let's take a quick look at this because this is really nice fib sequence. So I'm just going to measure the entire move. So the swing high to this new structure low. Okay, so we're at a 707 Fibonacci retracement. I'm going to invert with the Fibonacci extension. There's the swing low that preceded this pop. This is still an active leg. So instead I'm going to look left and use that swing. So this is a static swing in the market that preceded this new impulse leg. And as I pull that back down right here, you'll note we're right at the 1414 fib extension. And that 1414 is going to come in right at the 707 Fibonacci retracement. 1414, 707 inversion. And it's going to take a while there for Ninja to get that figured out. So let's pull this over. Ooh, I love it. Okay, so let's pop this guy up and then take a look at some of these other stocks. Man, look at that. We talked about selling that 380-160. We did get a pullback here, 368 to Amazon, and now some consolidation. Let's take a quick look here at Apple. One-to-one measured move in Apple. See that we're going to gap slightly lower, but we've got some consolidation. Kind of an interesting pattern here, gang. High-to-high trend line. Low-to-low trend line. Bull pennant. Impulse leg right here. Rod, you want to look at any other stocks? Okay, good. So this is a longer-term position, gang. 127. I'll leave those in and let's just modify colors. All right, gang, there's Sonos. There we go. Yeah, so traders, take a look right here. Look left again. Good solid company, great channel trade here recently. And again, this is the Donchian 100 bar channel. Okay, so look left right here. Our absolute swing lows from 2009 at basically 550. We came back down right here. We tested 680. So at this point right here, Rod's just doing some bottom fishing. And I imagine that you might even do an adverse excursion if we hit $7 or $6.50 here. Beautiful.